Index investing or passive investing has grown more popular with investors. Even Warren Buffett touts the benefits of owning an entire index like the S&P 500 over the long term. An example of an index tracking ETF is BMO's S&P 500 Index ETF. It's the largest ETF in Canada that tracks this well-recognized and popular index. It provides exposure to the returns of the market cap weighted S&P 500 index at a low cost with a management fee of just 0.08%. This broad market ETF makes for an efficient building block in a portfolio, saving you time and effort while mitigating single stock risk. If you're looking for exposure to the largest and most liquid public companies in the United States, this ETF delivers an easy-to-use solution and instant diversification. Commissions and management fees and expenses all may be associated with investments in exchange-traded funds. Please read the ETF facts or prospectus of the BMO ETFs before investing. Before we get started, I just want to remind everyone that this information discussed today is not intended to be or construed as investment advice. Please consult a professional advisor before putting a loonie in any of these financial markets.
The dirty secret is that no one's ever going to get paid back.
People have the shortest memories when it comes to investment.
We just got to get Keith into Bitcoin.
Hey, there's a bubble.
Welcome back to Loonie Hour, episode 109. As always, joined by the three amigos, Keith Dicker, IceCap Asset Management, Rich Diaz, PMG. Baby.
PMG Global. Get it
PMG
right.
Global. Best research around.
What is the first G for?
It's Pavilion Global Markets.
Global?
Yeah, it is global. Actually, the truth is, I used to be called Pavilion, and we used to have a consulting business, and we'd help with identify managers and all that kind of stuff. And then they split off, but in order to keep the branding and a lot of the sort of the goodwill that's in the business, we kept the name. But it's the same thing.
It's really global. Then it seems like.
Yes, very much so. Well, we do have a global trading desk, and we are 24 hours a day, which is actually quite rare for this part of the world, especially in Canada. So that's pretty good.
24 hours a day. I'll call you late night.
You should do. We'll have somebody on the desk for you.
Is it you?
No, it's definitely not me. No, it's definitely not me. But we do have somebody in, it might be Frank, but we have somebody in Asia. Yeah, Asia desk, European desk. And we have all these. Yeah, we get a lot of flows from them, actually. We do a really good job.
Do they let you press any buttons? Like live buttons?
I'm not allowed to touch any buttons.
Hammer the sell button.
That'd be a terrible idea.
Well, at least we know what's going on in Rich's world. Keith?
Yeah.
So I had fun today. I might get the wording a bit wrong, but I was invited to be, they call it a witness, was basically to provide some views in Parliament for one of the finance committees that's been established to, do some more research and better understand, appreciate what is causing stress on the Canadian housing market for prices as well as rentals. So I did that this afternoon. It's an amazing experience. So you get to see how Parliament works, and it's a lot of fun. You learn a few things from it, and because we are a money manager, I definitely picked up a few very important points that we'll keep in my pocket. And we're gonna make a lot of money on it. I'm pretty excited about the meeting that I participated in.
Are you? Today. Did you design another app? Is that how you're gonna make lots of money?
How much money did you make?
I saw that guy this week. That wasn't me at all. He had a pretty good deal, though. I think he did. I think he's going to be skewered when he's
for those that are not quite in tune with what's going on there. There's a big investigation going on with the Arrive scam app. For what was like the app cost like $50-something million.
$54 million.
And this dude was paid. It's just him and one other employee. So there's two people. They didn't do any of the work. They apparently hired out all the work, and he was paid like 11 mil, and he couldn't explain what he did exactly or how he got the job and the money. Anyways, it's quite the scandal. That's the RCMP has done this probe into it and said something's fishy here. So the $50 million Arrive Can app. Yeah, we were early on that. We were really early on that one.
We've been early to a couple of things.
Yeah. I think it's the gift that keeps on giving, though.
It is.
For us. It just keeps going. Because that with, Rich and the ESG stuff and, That seems to be happening as well as we speak.
Yeah.
Pulling on a few threads here.
And then there are about 18 other things we weren't quite close on at all. But those two, we're going to rock those too.
Okay, it's okay. You can't.
So Rich told us earlier, guys, that he has to make sure this podcast today is a little bit. It runs on time. We're a bit faster
right.
than. Why is that, Rich? What do you got coming up?
I got a date. I got a date and a deadline. So I gotta smash out my note, which I'm actually quite proud of. I'm working on the trucking sector, which I think is actually really interesting.
I think we should touch on that later in the show too.
Yeah, can do. And then if I make it on time, then I'm gonna jump off to a date. I got ghosted, so I figured out what happened to me. This is what the kids call it, ghosting, when someone just like doesn't answer your messages and doesn't return your text or whatever. I won't bring up the diffusion index on the next date. This is what I've learned from this experience.
I get ghosted all the time. And Boomer doesn't care. I think it's funny.
Yeah, I have thinner skin than you, Keith.
Well,
mine's a bit weather. Okay, Steve, what else you got lined up for us here today? This is a big day.
Yeah. I mean, I guess before we should really dive into it, of course, the Toronto live event, again, subtle reminder here, November 30th, tickets in the description in the show notes here below. So we'd love to, again, meet more of our audience in Toronto. It's a good time. Drinks, food, live podcast, Q&A. We're going to have a couple special guests as well. We have more on that to be announced in the next week or so. But yeah, anyways, come out. It should be a good time. It always has been. So, but Keith, I wanted to touch on this week, first and foremost, because obviously you're in Parliament or House of Commons, whatever you want to call it. The BOC deliberations. So they released, the Bank of Canada just started doing this, right? Where they released sort of their deliberations about why they did what they did at their most recent interest rate policy meeting. And so one of those was the Bank of Canada basically noting some issues there on the federal deficit. So it says here, governing council members discuss the aggregate spending plans of federal and provincial governments, which are projected to increase at an annual pace of roughly 2.5% in 2024. If all of those plans are realized, this would contribute materially to growth over the next year. By adding to demand at a faster pace than the growth of supply, government spending could get in the way of returning inflation to target. So there you have it.
Bit of a mouthful, isn't it?
That's from the BOC directly from your boy Tiff. So if you want your mortgage rates to come down so you can keep paying, for your mortgage and stay in your house, obviously you need government to pare back on their spending, which there doesn't seem to be any plan yet.
Yeah, no, it's surreal. One thing interesting, Bank of Canada, they started to get a bit, they started to push back on some common themes that have been pushed against them over the last 12 months. And because I find maybe 2 or 3 years ago, it was very political. And they were sort of, they were getting pushed around. But now, credit to them, they're standing up on their own. How many feet are over there, Rich? How many PhDs and everything?
How many do they have?
Way too many.
The Fed has like 400.
Oh, the Fed's a huge machine. The Fed does
so
lots of stuff.
what does Canada have? If I had to guess, like Canada's probably got,
I'll look it up,
30 or 40 PhDs.
Oh, come on, more than that. I hope.
Well, I'm just saying, if they've got 400, I'd do 1/10 the population. So maybe we should have 40.
That's a good
PhDs.
way of guessing. You should be a private equity guy. That's a great way to guess.
It's not too late. You hiring?
More importantly, let's while Rich is diving into that deep thought for Steve. So, I mean, the main thing to unpack, first of all, I think it's great that the Bank of Canada is doing this now, releasing their deliberations. Because with the central bank, it's all about trying to be as transparent as possible. It shouldn't be a black box. And I think that's what they've had for a while. And so they're doing that. It's great. But the Bank of Canada, together with all the other central banks, even the Americans with Jay Powell this afternoon, they're coming out and they're still threatening that, hey, we will raise rates if we need to again. Like, we're not going to hesitate to do that. They're holding up the stick, but I'm not convinced that they're going to get to do it.
Okay, Keith.
Never. They'll never raise rates again.
Put your tinfoil hat on here for a
Not
sec.
during Rich's single life. How's that? Yeah.
Entertain this what's your honest opinion on, Rich? I'm kind of curious your thoughts here too. How much of these minutes, whether it be for the Fed minutes or now we've got the Bank of Canada minutes, how much of this is doctored to put out a message that they want the general public?
Oh, I'll go first. 100%.
100%.
Right. So I know everybody, I always find it interesting though, because everybody reads the minutes of what word did they take out of this meeting and replace it with a different word, and it's just everybody just scours over these things, knowing that it's really just it's a doctored script to begin with.
But it doctored and it's not doctored, right? So if you were the Bank of Canada, and let's say there was two people, I was the Bank of Canada governor, and of course I would never say anything like inflation was transitory or tell people to borrow lots of money. I would never do that. And you were deputy governor, and Keith.
What would you tell them though, Rich? What would be what would you say?
My mouth shut. I just keep my mouth shut. Anyways, so if you guys were both my deputies, and you were both having a huge fight about inflation or where we should go out for dinner or whatever, you don't want that in the minutes. And so that's where I'm. We can be critical in one sense and say that it's doctored and it's a messaging form to tell us what they're thinking, and is it really transparent if they massage it? But also, you want them to have a free and easy debate on what monetary policy should be, and in order to do that, you do have to keep some anonymity.
I think that's why they call it the deliberations. Correct. I don't think minutes are in the title of that document.
Yeah, deliberations. So behind the scenes, they're basically hey, we can all agree the economy's screwed and we can't raise rates, right?
Exactly.
But make sure don't put that in though. Make sure you tell them that we're still hawkish.
Talking to say, hey, strike that from the record, and yeah. But I think you're right, guys. That minutes no longer mean what minutes used to mean. Years ago, everything was verbatim, whoever said what. For example, the minutes from the Loonie Hour, holy smokes, that would be
would be canceled right away.
Our WhatsApp chat group, we're in trouble.
Be the shitter's full. That's for sure. But but it's just another tool that the central banks have. They need to communicate because they have their policy decision and then their announcement with it, and then the presser, and then this is yet another way to sort of reinforce the message they want to send. And then of course, guys like us, we'll dive into it and go, well, they said this or they didn't say that. But right now, we always talk about the journey we're on. Not Rich, not Aerosmith, journey. I love that one. But this Canadian economy continues to trend lower and lower. And I think we had the Canadian Tire earnings came out this morning. What happened with those, Steve? I know you're a big Canadian Tire guy.
I love Canadian Tire. No,
so do I.
No, they're terrible. I'm sorry. Yeah,
no, I love them. You guys are such haters.
We should have a Loonie Hour poll here. Who actually shops at Canadian Tire? You got to be 55
Steve,
plus.
aren't they advertising with us this week? You're worse than Rich now when you did
no,
the mail
they're
one.
Not. They definitely won't be anytime soon now. So they said basically on Thursday they're going to lay off 3% of its full-time employees in an effort to lower costs. Remember, this is a guy that flagged really soft retail spending on the consumer side 6 months ago. So the CEO has been pretty vocal about the condition of the consumer. And so basically he again came out and flagged interest rates and said I think retail sales were down 2 or 3%, same store sales. So and then he basically just flagged interest rates and said they're starting to bite. We see it as Canadian Tire. Of course, Canadian Tire also owns Sport Chek for those that aren't quite aware. So they've got a pretty good stronghold on the Canadian consumer.
And they have Mark's Work Warehouse as well.
Do they?
Yeah. Now what they call it, just Mark's. They got
Who
rid
shops
of
there? You shop there?
I love Mark's Work
You get
Warehouse.
your boots there?
Well, they have nice jeans too. They have the GWG. Is that what they're called? Yeah.
I have no idea what you're talking about.
People my age, they're laughing at this one. Yeah. So it was an old brand of jeans from years ago. And Wayne Gretzky, he was one of the first big names they hired with, to do a commercial for it. So GWG jeans, I think you can still get them at Mark's Work Warehouse, which is owned by Canadian Tire. Continue, Steve. We got a lot of
We should
other
get a
stupid anecdotes.
Mark's Work
today.
Warehouse discount code for Loonie Hours. Yeah, but basically he says there's no question that the most difficult business decisions are the ones that impact young people. Consumers are shifting away from higher ticket discretionary items and also reducing the number of items in their basket with an increase in single unit baskets. I don't even know what the hell that means, but anyways, people are basically tapped out and they're pulling back on their spending, and Canadian Tire has been flagging that for quite some time. And they've also got, I think their largest business revenue generator, correct me if I'm wrong, is actually their credit card business. No,
A lot of companies are like that. A lot of car companies, they're large. They actually, some of the car, I'm not sure how EVs affects this, but for many years, Volkswagen's most profitable kind of opco was their Finco, their financing operation of their of their sort of automobile business, but it was actually just the financing of those cars. So I'm not surprised that Canadian Tire is making lots of money. I think those single item shopping, what'd you say? I actually know what that is.
Single item baskets.
Yeah, so single item basket is like when you go shopping and you just for one specific thing. So that tool, that screwdriver, that hammer, whatever. And if you're feeling tight and you're not going to splurge on the impulse buys of, you might buy a pellet gun or a hockey stick, whatever you might buy at Canadian Tire.
Pellet
You know what they say, Rich? If you have a hammer,
all you need is a nail. Everything looks like a nail.
Yeah, everything is a nail, right? You smash that.
Yeah, and you're going all the way to Canadian Tire for one item. That's it's a battle.
That happens.
It's a good store.
But with this, though, I mean, I remember the theme that we've been talking about for a while is, it started with the Canadian banks and what they were recognizing for bad loans or loan loss provisioning or provision for credit losses. They keep changing that title over the years. And remember, we've been tracking that. We're saying, oh, wow, something interesting is happening here. Like we said, hey, this is telling us that the banks are getting a bit nervous about credit. And, then obviously then that either reinforced the housing market pausing and, the stress we're having. And then we're starting to see some of the aggregate data numbers come off a bit lower. So I think, we just had officially, 2 quarters, Rich, of 0 to -1 or something.
Well, not quite yet, but we're getting there. Yep.
Yeah. And so the one I'm really excited about, and can you imagine getting excited over well, I do, but the bank's earnings are going to come out in a couple of weeks. So that's then when we get further confirmation of what is happening with their loan loss provisioning again. It's also their year end. So we have that. Is that going to be?
They've been
Q4. It is for their fiscal year. So banks right now, like they're sitting there, they've already established their spending budgets for next year. And I bet they're a lot less than they were, last year and stuff like that. But, we continue to get pieces of information, which continues to suggest that this is our view, that we are not going to get a no landing or just a soft landing. I think this can roll over pretty aggressively. And when it does, it's opportunity, right? That's the way I see it.
Yeah.
You smell it, Rich? You smell the money?
What movie is that
All I
from?
smell is fresh paint. We're in a new office.
And by the way, I'm being insensitive when I say that. I mean that purely from the eyes of an investment manager, because it will not be pleasant for families. I do know that.
Well, speaking of which, we had the BC government come out with, I think people that are following along here in Canada, there's been a lot of discussion, of course, around housing affordability. What do we do? You've got the Liberal government versus the Conservatives. Pierre Poilievre has come with all these ideas. The Liberals are now, so there's been a lot of topic and conversation around how to fix housing. And of course, we've really tried to hit the demand side in recent years. And now governments are saying, okay, well, if we're going to import 1 million people a year, maybe we do need to look at the supply side. And so there's been all this debate around federal responsibilities, provincial responsibilities, municipal responsibilities. So the one thing is, again, love them or hate them, the BC government has come out and taken some drastic measures over the last 2 months or so. And and again, I'm not saying it's going to solve the housing issues, but I think it's a step in the right direction, which is they just announced, this was actually on Pierre Poilievre's platform, essentially, announcing new legislation to require minimum residential building heights of up to 20 stories for sites that are within 200 meters of a SkyTrain station, 12 stories for sites that are within 400 meters, and up to 8 stories for sites that are within 800 meters, 400 to 800 meters. So basically what it's saying is we want high density around these SkyTrain stations that are ultimately receiving federal funding. And similar policies there are going to impose for sites near bus exchanges and all across Metro Vancouver. So I think that's a huge change. So basically what it's doing is the municipal government is basically removing the zoning capabilities from municipal governments. They're saying, well, listen, if you guys aren't going to do it because you're afraid of the political pushback, we're going to mandate it and impose it on you. And so now the municipalities have, once this legislation passes, municipalities will have however many number of months to sort of rewrite their bylaws and their zoning sort of regulations and maps to adjust for this. So huge.
My question is, can you explain the pushback that the municipalities and the provinces and the federal government, this dance that we're seeing, that the federal government is getting involved instead of skipping the provinces, dealing directly with the municipalities? And then I've read, I read a quick article about how there's sort of the provinces are getting upset because they're on their turf or what have you. I mean, have you heard of that, or am I garbling this?
Yeah, it's I don't know. It's all like political, and to be honest, it's got a decent understanding of it. But I mean, someone that's like inside the politics of it will be able to explain it better than I can, obviously. But basically, the municipal governments are like, well, hey, like our constituents don't want density here, and how are we going to pay for all this upgraded infrastructure? And like we're already kind of starved for tax revenues, and you're just imposing this, like how are we actually going to implement this? And so, and same thing on the BC government side, obviously, like it's just a constant battle of like whose responsibility is what, and what are the repercussions when you go and do this. And so, part of this is, okay, well now if you're going to impose this density on us. So like earlier like last week, the BC government at the same time came out and banned single family zoning in all of BC. So any community with 5,000 or more people, if you've got a single family lot, you're going to be allowed to build, duplex, triplex, fourplex, sixplex, depending on the size of the lot. And again, they're waiting for the exact numbers and legislation to pass through before they get some of those details. And the devil is always in the details. But like all this
just wait a second. Whoa. So did I just hear you correctly? You said you're in a small town, 5,000 plus people. You can't get a permit to build a single family dwelling? Did I hear that right?
So you can still build single family, but they're saying like you can't not allow duplex, triplex, fourplex, whatever. You know what I'm saying? So it's like if you have a single family and you're like, well, I can either tear it down and build a new single family, legal, totally good to do, or you can now do, let's say, a triplex. Like before, it'd be like in the zoning regulations, it'd be like single family only. So the BC government is saying no. If you have a single family lot and it's a certain size, which they haven't dictated yet, you're going to be mandated to update your bylaws to allow this type of building. So again, the municipalities are like, well, how do we fund this? Like we got to pay for all this. So there's this kind of fight about community amenity contributions and development cost charges. And it's kind of this developer technical lingo that we don't really need to get into, but it's basically fees that are charged on new housing supply. And so is
this welcomed from the developer side? Is everyone excited to hear this?
Yeah, it is. Yeah. And I know people are like, oh, like, anti-developer, but like the reality is it's like, again, if you're going to pull 1 million people in a year or remotely close to it, I would argue even at 500,000 people a year, which is our permanent residence target, like we have a structural housing imbalance here. And you do need to densify. I mean, I always look at it, the fact, like I live in Vancouver here, 8 minutes outside of the downtown core, like you can buy a $3-4 million single family house. It's just bizarre. Like, go to any
Bizarre.
major metro, Rich. Like, you lived in London. Like, you know, if you
It's
want a single
nuts.
family, it's nuts. Like, if you want a single family house, you're driving like what, 45 minutes, an hour out.
Yeah, of course. You're in Surrey. You're in a green belt. I mean, in London. I mean, London's a bad example because it's one of the most expensive, or used to be one of the most
Totally.
expensive cities in the world. But like, let's use like New York. I mean, those Essex County, which is in New Jersey, which is just across the way from New York City, which is one of the richest postcodes in the world, probably, certainly in America. I mean, the average house price there's $3.5-4 million US. You know what I mean? And this is rolling hills. Like, these are, do you know what I mean? This is one of the elite neighborhoods in all of America. So this is not just down some crappy bungalow downtown Vancouver. No offense. You know what I mean? It's just,
Totally.
it's mind boggling.
Yeah. Yeah. So, I mean, I think it's, Keith, your point. So anyways, just to kind of summarize, the BC government has gone. So they've essentially, more or less, in the last month, they basically banned Airbnb, more or less. They've legalized multiplexes on all single families, and now they've mandated high density along SkyTrain stations, all in.
So how long now then will it take to see the impact that these policies?
Oh gosh, 10 plus years.
Wow, really?
Yeah.
Come on.
So
it's supposed to happen tomorrow.
So here's the thing, right? This is funny because like everyone's like, at the end of the day, how do we start open this conversation? It was all about like the economy's kind of pooched, interest rates are up, like nothing. Nobody wants to build right now. Like the numbers are just so tight. Construction costs are so expensive. They haven't really come down. They might have leveled out, but they haven't come down. And the housing market stinks. So like from a risk reward, risk your capital, run the numbers in a spreadsheet. Like people aren't building today with
Yikes.
construction financing loans at 8, 9, 10%. And even higher in some cases.
Maybe the government should jump in and start building.
Come on.
CMHC built, I think, was it 12 houses over the last 5 years or something like that?
Is that accurate? Like,
Yeah, that sounds like that.
But are they in the business of building houses? I thought they were just in the business of subsidizing people to borrow. Yeah, do you know what I mean?
Yeah, well, I mean, so basically, I think CMHC, to my recollection,
isn't the M stand for mortgages in the CMHC?
Canada Mortgage and Housing Corp.
Yeah.
So,
but underwriting developers is not an unreasonable way for governments to step in. That actually makes sense, though. It's just like
I think they actually used to build houses. Like they were originally created after the war, for all the people coming back from the war to actually build more housing. So it was built for.
So, Rich, you think the government should subsidize? Private sector to incentivize them to build houses?
You and I disagree on this philosophically, and that's okay. I won't cancel you, but I do think sometimes governments should underwrite large infrastructure projects that the private sector is unwilling to do. For example, James Bay, that was a good project that the government underwrote. All of the highways, there's loads of infrastructure projects where where there's no private sector money, no one is going to take that risk. And governments, in my view, should come and underwrite. I'm not saying they should just give people blank checks as they do with certain programs aforementioned on the show. What I'm saying is
software programs.
What I'm saying is you can guarantee loans, or you can create a. I mean, for example, James Bay is a perfect example. The Quebec government and the Bank of Canada underwrote a project that's been very successful. I mean, it's provided green energy in Canada for 50 odd years. You know what I mean? Now, there's obviously examples where that goes badly, like in Newfoundland with the hydroelectric dam there. That's been a complete disaster.
Well,
so I'm not saying it's
pipeline
perfect.
JT bought.
Yeah, well, I mean, that's Biden's fault.
We're talking about housing. Now you're jumping over to infrastructure.
But my point is, housing is infrastructure on some level, and underwriting a project, is not an unreasonable thing to do.
I will chime in there. So CMHC actually, to their credit, I know we like to dunk on a lot of these policymakers, but they think one of the most successful programs they brought in, I believe it was under Evan Siddall, who, again, I kind of liked personally, but I know he's a very controversial figure at the time. He brought in the rental financing program. So what they're doing is like, okay, we want people to build more rental housing, right? We don't want, they're trying, because Evan's whole pitch back in the day was, this is like 3, 4, 5 years ago. His whole pitch was, we're glorifying home ownership. We need to give people better alternatives so they don't feel like they have to buy and speculate on housing. So let's open up the taps and build more rental housing. And so what they did is that, okay, you're a developer, you want to build rental housing, but the economics of it don't make sense. Okay, well, how about we give you very favorable credit? And so what they did is they basically said, okay, you will, in some of these projects, you can finance up to, I think, 90%, 95% of construction costs to build the housing. And then once it's done, you can convert it up to a 50-year amortization on a 10-year fixed rate debt at below market rates. So that's where CMHC's money has been directed. And if you look at rental units under construction in Canada, it's like, I think it's at all-time highs, or it's back to levels that we saw back in the 1970s. Hey guys, sorry to interrupt the show. I just want to remind you the Loonie Hour is going to be live in Toronto on Thursday, November 30th, starting at 6 p.m. The doors are going to open. It's going to be a live podcast, drinks, appetizers, laughs, good times. It's going to be so much fun. If you've ever been to any of our live events, I'm sure a lot of you can attest to that. But go check out our past live events on our YouTube channel there. You can check it out. Come meet hundreds of other Loonie Hour listeners. Come support the show. We'd love to see you there. There's going to be a link in the show notes below. Whether you're watching this on YouTube or listening to it on Spotify or Apple, there's going to be a link in the description which will take you directly to the Eventbrite page where you can purchase a ticket. Hope to see you there. So Keith, we've also had some interesting comments from the highly watched Fed. So we had a couple speakers out today, and then we also had Jay Powell out today. But we had, what is it, the Richmond Fed's Barkin. He was out today. So he says, well, basically, there's an interesting quote from him where he says, I believe there's a slowdown coming. I believe we're going to need that slowdown because I think that's what it's going to take to convince price setters the days of pricing power are over.
Yeah, that's what that's what you do when you raise rates. You're trying to get people to spend less money, while you create, a recession. So he is right.
I mean, I thought he was talking about
the
grocery CEOs there in Canada.
Yeah,
that's such.
But you have, they're walking this fine line, and it's just weird in that, from a financial market perspective, they're trying to convince. Let's say central banks are trying to convince everyone that they still raise rates. Because you have the expectation that inflation is still strong, then it'll cause you to, hey, let's stop spending. If all of a sudden the central banks come out and say, hey, we're finished hiking rates, we think inflation is now over, people will start spending differently. Their behavior was changed. So you're always getting these different comments rolling back and forth. But the best story from Powell, Powell had some words today. Specifically, he said, he won't hesitate to increase interest rates more if appropriate. So that's big. And but even more interesting, here's from the story. Okay, Rich, you ready? Shortly after he began speaking, Powell was hustled out of the conference room as a group of about a dozen. That's a dozen, Rich. Environmental protesters jumped on stage, brandishing a banner. They chanted and spoke out for about 5 minutes before leaving. These are back to the days of Mario Draghi. Just you need to Google the Draghi one with the I think what's they call FEMA protesters. They jumped up on his desk, but now here they are in America.
Stevie Guilbeault was on stage there.
For the record, he was throwing tomato soup against the paintings and stuff.
Just so for people paying attention at home, U.S. emissions are down 20% from the peak and falling. I want people, when people read these headlines and see this BS, just keep these things in your mind.
That'd be emissions per capita.
No, emissions per capita are also falling, which is crazy. So again, don't take my word for it. It's called All Our World in Data. Just Google it. There's an amazing website. You can click through all you want, and you can double check all my numbers and why I'm so exasperated by all this nonsense. But no, let's get back to the Powell thing, because I think that's more interesting.
The
I also think
protesters or his comment?
No, his comments, Keith. I think you should just elaborate on your point on that, because you were on this a long time ago. What does it mean, really, when he says, when he's this hawkish, when he says they won't cut rates, when they're looking for, what does it say? What did you say, Steve? That for price setters to be less aggressive with their
price setters to be punished.
Yeah. What is it?
Yeah, I mean, so, I mean, as we know, we're all good with numbers. So inflation data is coming down. A lot of it's just because of the base effect, that I would argue. And if you cheer it up, obviously, yes, some goods and services are coming down in price and things like that. But the concern for the central banks, if they announce now that, hey, we finished, we achieved our goal, we don't need to raise rates anymore and stuff, there hasn't been that financial pain. If they do that, 6 months from now, 12 months from now, we're going to be right back to where we started, because financial markets are just going to blast. They're going to go to the moon. And you start making more money in your investment portfolio, your house is up in price, you're getting bonuses from everyone feels better again. You spend more money. So the inflation story will come back. So they're trying to walk this real fine line to crush markets, crush the economy, but not crush it, have down that path. Because the moment any of the central bankers announce that, they're sort of finished raising rates, what happens? We get risk on. So what's really great here today, so if you look at currency markets now and the S&P, all of these markets now, they're almost back to where they were at the beginning of the last Fed meeting. So that was last week, we had the Fed meeting. And it was kind of funny. If you read the message from the Fed from the last meeting and the one compared to the one of the previous one, and what Powell said in the presser, there wasn't a lot of changes. It was all very similar, but yet the markets interpreted everything as, wow, this is dovish. They're finished hiking, and that the dollar got clobbered and equities took off to the moon and commodities went flying and all that stuff. And now here we are, literally 4 days later, maybe 5, 6 days, 7.
I don't know. I thought you said we were good at math.
I know, you know what I mean. But now markets are rolling over again here. So this tells me, we're still in a precarious spot economically, and same with financial markets as well. This ain't over.
The thing that strikes. Oh, sorry. Go ahead, Dean.
No, you go ahead.
Well, I was just going to say, the thing that jumps out at me is that it just hasn't been that long at these rates. And, people say it's the delta, which is the change in the Fed funds rate that matters, the change in the financing rate that matters. And to some degree, that's true. But, if your financing costs go up 400 basis points and they stay there for, a hot minute and then they decline again, you could sort of weather that storm. You could survive. Maybe you change your purchasing habits. Maybe companies change their financing. Companies that used to have viable business, operating businesses and financing, methods of financing themselves, you can survive that. I think what the market's not pricing in and what people aren't talking about is what if they forget raising rates more? What if they just hold these rates at these levels for a long time? And I would suggest that in Canada, I think that you will definitely feel more a lot more pain is to come, I think, on the housing, just because how highly levered we are to the front end of that curve. But I think in the US, it's the corporate credit that I think will really feel the brunt of that higher rates as we're seeing, but for longer. Because once you sort of have, again, we've talked about this before, but I think it's an important point to reiterate. It's it's the refinancing. You can survive if you're on a fixed rate for 5 years and interest rates are up 5%. You're not being affected by that at all. It's not, and companies are the same way, right? If you're rolling over your debt 3 or 4 years, if you're a widget factory and you've borrowed money to build to expand or whatever, and you've locked in that corporate bond for 3, 4, 5 years or whatever it is, then you don't care that interest rates are up, because you're just going to continue to pay your coupon payment of 1% or 2 or 5 or whatever it is. But it's that refinancing cycle that I think really will bite, and I think that's something we have really yet to see, and that I think will cause a lot of pain.
that's a really good point. I think we've talked about it briefly on the show, right? But like, remember, by the end of this calendar year in 2023, like just under 50% of Canadians will have seen a mortgage payment increase, right? So like you talk about this refinance or renewal cycle, wait till the other 50%, endure a higher
And they've been
payment
big
shock.
changes as well, right, Steve? Like significant dollar changes, right?
Yeah, I think like the weighted average was like if rates stay at 6% or something, like the weighted average increase would be around 30% of a payment increase, right? I mean, it's a substantial sum. I mean, I could tell you, yeah, like we've chatted about it a little briefly on the show before, but like I always look at like even the real estate development community, right? So you're hearing some of these stories with some of these developers that are okay, they're under pressure. There's some challenges, like a lot of these construction loans, like these land loans, they'll be 2-year loans, right? So it's like a lot of them are coming up for renewal and things of that nature. And prime rate goes from whatever it was 2.5 to now it's at 7.2 or whatever it is in Canada. You can kind of stomach that on these mega large projects, multi-millions of dollars that you're borrowing. You can stomach that for 6, 12, 18 months, but at some point it's like the longer that they sort of stay at these levels, Rich, I agree with you, like you can kind of see like the writings on the wall. It's just everyone's trying to like just survive and get through, hoping that rates are going to come down in the very near term, right?
But the challenge with that expectation is if the Bank of Canada is cutting rates, it means the economy is coming off, right? So, people lose their jobs, the bonus is less than it was expected. Maybe you have stock options or restricted stock in the company you work for, and that's coming off. There's a reason you don't want the Bank of Canada to start cutting rates. If they are doing that, it means there are bad things happening elsewhere. And then you might say, well, if they do, that's okay, because it'll still help my mortgage, because he's going to be like prime plus a number. That plus a number, that's what the banks will tack on. That's the credit spread in the mortgage world. So if the Bank of Canada are cutting rates because the economy is going into recession and all that stuff, the prime plus is going to be plus more than what it was before. So even though the Bank of Canada may cut rates, say 25 or 50 basis points, you may not get any relief whatsoever in your variable rate
I think you'd see
mortgage.
that in the bond market, though.
Yeah, you would.
I think you're going to see, again, we can't confuse the government yield curve with what the mortgage yield curve will look like. Because I'm telling you, if the economy is rolling over, banks will retrench. Like they will be reluctant. They'll still lend, because that's what banks do, but they'll lend at a higher price. And that higher price, would be
It'll just be a baked-in risk premium.
Yeah, like it's again, I think we're headed for a real. I hope hope it's not. I hope it's 3 to 5 or 6 quarters of like minus 0.1, minus 0.2, and economists fight over the decimal point and everyone else just sort of yawns and that's it. But the concern is that it does go a bit deeper. And if that happens, as Canadians, the same with Europeans and the Brits and the Americans, like everyone, you have to sort of, protect yourself to make sure you're ready for that.
It's interesting to see.
World. It's not nice to hear, guys, but that's what I see where we have to go based on all of the policy actions that have taken place. Come here, we had a decade of zero rates, near zero, and negative, and QE. And then we almost started coming out of that game in 2018, and the Americans had to stop it, because the world was falling apart. And then we had, the policy response from COVID. You've heard me talk about this before, what they did on the monetary side and fiscal side. We have to pay for that. It can't, there's no free
Lunch.
There's no free lunch here, right? Yeah, free money. We all thought it was free, but it's not.
MMT.
MMT, you beat me to it.
Maybe that's what they can do, Steve. Maybe whatever everyone's mortgage cost goes up by, the government can just print more money and subsidize.
Do you want to comment on that?
No,
Go ahead, Rich. Will it work?
No, if
Keith,
you
I
raise
wanted you to comment on that.
that.
Mr. Big Shot over there.
Yeah.
You want me to comment? Who's the big shot?
Wasn't there a proposal in the
In committee?
No.
Okay.
Say it.
But these are the conversations that will come back up again, because governments they react to crises.
I mean, I wouldn't say it's even Jagmeet at the NDP there was talking about a mortgage subsidy like 3 months ago, and he got destroyed on Twitter for it. So I think the thought is already out there.
Doesn't matter. That's just a bunch of young kids.
No, but what does matter is subsidizing the wealthiest people in your society. And I am against that, which I think is a pretty reasonable position to take, because that's exactly what doing that kind of policy is. Asset holders don't need help. They are protected from the rising prices of goods and services because they own generally
guys.
Except for the pre-sale guys. And subsidizing mortgage rates just allows a further bifurcation of our society in between people who own assets and people who don't. And so those kinds of policies, again, sound great on the face of it, but any simple analysis will tell you that it's just literally handing money from savers to borrowers, from the working class to the people who own lots of assets.
I mean, so the challenge we have, let's just walk through. Let's say we do get this economic downturn that I'm expecting, right? And it's not an economic crash, but it's not this soft landing. It's somewhere in between, and it won't be pleasant. And the way, that the ship rights itself is that you need foreign capital to come into the country. Right, that's what you need to happen, because the Canadian dollar will get mullered when this happens. So you need foreign money to come back in to, hey, yeah, this is attractive. Now, for that to happen, you have to be more attractive than the Europeans, the Japanese, the Americans, and everyone else, right? Because it's not quite a net zero or zero sum game, but you need to be better looking. And the challenge with Canada is that our debt has increased so much over the last couple of cycles here, and I know other places have as well, but we need to get this this deficit spending under control to make things more attractive relative to the neighbor, and I don't think we're at that point now.
Keith, it's not just the deficit spending. That's what makes this particularly dangerous for Canada. It's the household debt to GDP ratio. Remember, in the US, it peaked in 2008, and they had a massive readjustment. It went down from 100 to 70 or whatever percent. In Canada, it went the other way. We're at 110, 115, depending on which day you calculate it and what source you get. Debt to disposable income in Canada is 180 odd percent, maybe it's 170%. I can't remember exactly the number. And then non-financial corporate debt is also extremely high. And so you add the 100 plus 100 plus 100, Keith, what does that equal? 300. And so debt to GDP of 300.
Steve is still counting his fingers on that one.
But 300 per debt. But I'm serious. Debt to GDP of 300% puts us in some rarefied air. And I believe that there's only 2 or 3 other countries. Japan, which is just its own
Australia,
Switzerland, which has Switzerland has a current account surplus of 10% and hasn't printed anywhere near as much money as we have, and owns the S&P 500 and is extremely well-run country despite their debt issues. And so we have a country with very low productivity growth. The only industry in this country that has a huge current account surplus is one that's being constantly berated, and every attempt is being made to destroy it. And we have our debt to GDP levels at unheard of numbers. So I don't know how the only 2 ways that you square that are an internal devaluation or an external devaluation. An external devaluation is not a complete collapse, excuse me, I should be careful with my language, a huge decline in our currency. And an internal
Is there
devaluation.
a ticker symbol for the currency?
Come on. And an internal devaluation is we all are materially worse off for a long time until you recalibrate your consumption. And that's the game. Like, so anybody who tells you, I don't know, Keith, I think we agree on that. Like, it's just, you have to work your way through that, and it's not pleasant.
But when I say it, it's kind of folksy. Like when you say it sounds, you know what you're talking about.
No, I think we come at it from different angles, but I think we sort of reach the same conclusion, which is maybe terrifying for some of us. Me.
Well, yeah, I wanted to pick your brain on that. I just wanted to kind of curious your guys' thoughts on like the regional differences. Like obviously we always talk about, oh, Canada, and like everyone's gonna feel it to some extent. But like I found it interesting, like just on the Canadian Tire notes as well. Like the CEO who said it, like we're seeing it predominantly in the pullback in BC and Ontario, of course, which are like your two highly levered housing markets where everyone's kind of all in on that asset class, and that's had a huge pullback. Looking at like housing, we always talk about Canadian housing. It's like looking at what's happening, inventory. So real estate inventories in Toronto are up 50% year over year. You go to a place like Vancouver, they're only up 12. Calgary down 17%. So we're seeing these regional differences. I'm kind of curious, like how I'm assuming like Ontario's has to be the eye of the storm. Really, the largest economical powerhouse or whatever you want to call it in Canada. It is it's where the vast majority of our
gravity.
GDP is. Yeah,
it's the center of gravity. Yeah,
and that's I
what
mean,
the
you
G
hear all these
stands
stories,
for.
these
It's the
pre-sales.
Greater Toronto Area Authority. What does the G stand for?
Greater, I think.
Greater Toronto Area, the GTA.
Yeah, so that's what you're right. Like it is the great place to, but this is what we talked about before. In that Alberta will have their cycle like every.
How do you see Alberta playing out, Keith? Because I was actually going to ask you that. Like everyone's like, oh, oil this, like oil. I mean, it's coming off, pretty significantly right now in the last, week or two.
Mm-hmm.
I mean, obviously, if you go, like everyone's talking about the supply side of it, but if you get this recession, which I agree with you is seemingly inbound, I would argue already here in Canada, you would imagine oil demand is going to get smacked pretty good.
Yeah, but I also think though, if you overlay on top of it or the geopolitical risk, I can see oil having a floor here at some point soon. And I think we could be in a recession where energy prices are high, but not for the demand side, more because of supply and the premium attached to it. But overall, I mean, with the Great Toronto Area, the GTA, it has never experienced a crisis in our lifetime. It hasn't happened.
It's true.
So yeah, and it is.
You don't think? I feel like the 1980s there was.
Yeah, early 90s, it did. It was commercial real estate challenges, and some of the insurance companies went under because their balance sheets were stuffed with real estate, and that did happen, absolutely. But it was kind of short and shallow, and it didn't spread across the country and everything. But again, today, like it's housing, it's real estate, it's a levered asset. So if you lose 1%, you're levered 10x, that's a 10% loss. You look at it that way. You go to Bay Street, I mean, it's just banks and investment companies, insurance companies, they're all levered entities. And again, they haven't felt a hard downturn before. So if we do get it, I think Toronto becomes the epicenter for it. And I think then everyone will want to hang out, in Canmore or somewhere like that. So that's Alberta, by the way, Steve. Steve doesn't like to cross the provincial border.
I've been to Canmore. It's beautiful.
Yeah, it's nice there.
Steve, I have a micro answer to your macro question, which is, so I think that it is a different cycle for the oil companies. And I would say, and why I think you might have a situation where you do have higher than normal oil prices, even if you have a downturn, is because the world has not been investing in energy at anywhere the same rate during this past cycle. You can thank all the protesters for that. And the reason that's super important is because companies in the west of Canada and Alberta historically, when oil prices rise, they chase that marginal dollar because they're, I wouldn't say the irresponsible CEOs. Let's just call them cowboys. And so in order to make some more money, they plunk another well in the ground. They spend the capex on exploration, and they're chasing that marginal dollar, and they kill their free cash flow, right? So you're spending more money chasing that marginal dollar of oil. And in that scenario, you basically create the situation which will kill you. So the supply rises with the prices of oil. Then when demand falls, prices fall, but you've already sort of committed to all these huge projects to generate the supply, and it exacerbates the downturn in the commodity. That's like basically the nature of lots of commodity producers and industries. In this cycle, because oil companies have chosen to, either because of regulation, because of ESG garbage, because of other, have not chosen to explore. So capex and mining exploration in Canada is at a 25-year low in real terms and relative to GDP. Excuse me. And you've seen a situation where these companies are making huge free cash flow yields, and they've paid down their debt. Demand for oil is still high because oil is super useful. And so these companies are extremely profitable, and they haven't extended themselves in the same way that they have in other cycles. And so again, it's a PUic victory. These environmentalists, what they've given them is what they have is a PUic victory by not exploiting these resources. You basically have crystallized these businesses into massively cash flow generative assets that can weather a downturn. So in 2016, when you had the decline in oil, all these oil companies in Alberta, they had to, fire loads of people and retrench their businesses, get rid of projects, blah, blah, blah. This time around, they didn't do that. They didn't increase their capex. They didn't hire loads of people. They didn't increase their supply. And so if you do get a downturn, who knows what will happen? They're much better position. Now, their shares might still fall, but they won't go out of business the way they did in past cycles. That's my bet anyway.
Couple observations. One is you've now said exasperate 3 times.
Oh, sorry.
Podcast.
Do I have to pay a fine?
No, I haven't heard you use that word before. Like in 108 episodes, all of a sudden 109, you're going nuts. That's pretty cool.
You got the Patagucci jacket on, mid-show. Don't you realize heating oil's free now, bud?
I know. We're recording this on Thursday, but it's a little bit later than normal, so it's happening. The other point that I think it's ironic, if this happens the way that you just shared with us, Rich, all of a sudden Canada goes from a country where Alberta is bad, we don't need Alberta, to where, if it plays out the way that I think it might play out, where the Great Toronto Area experiences stress, all of a sudden here it is now, Alberta is the one holding up the country. So and I think it's I think they know how I feel about it. Alberta's been getting a bad rap now for a while.
Did you say rap?
Did someone say rap? I have a rap. I actually did a rap there a while. I wrote a rap.
Oh God, please no.
I won't do a rap today. But Alberta has taken it on the, maybe not on the chin, but they've been attacked from a lot of different sides because of the climate change policies coming out of Ottawa. So this could flip 180 at some point, and all of a sudden everyone is running to Ottawa. Their population growth surges. Maybe that's what happens. Maybe it doesn't.
I was waiting for the rap.
We're taking a break.
I think we should take a break. I think that's it. I think we're done.
I'm going to call it. That's a good place to end it. I think I said Toronto event, November 30th. Last plug. I'm just going to keep hammering that show. We'll see you at East Danforth, November 30th. And as always, appreciate the support. We'll see you next week.